Morning, everybody. It's the 12th of April with Signal Centre. I'm Joe Neighbour and I'm joined by Steve O'Hare. Good morning, Steve.
Morning, mate.
Happy Pubs Day.
Yeah, yeah. There's probably no one sort of watching. They're probably already queuing up outside, waiting for the pub to open.
Well, the radio station I listen to in the morning, Chris Moyles and his gang, they were just down at the pub.
Oh, are they?
They went down, they did a radio show from the pub.
Oh, brilliant, brilliant. I
Yeah.
mean, what time do pubs open nowadays? I mean, I
Well,
think
some are
that
open from midnight, I saw.
no way. From
Yeah.
midnight last night. Oh
Yeah.
dear.
Yeah.
Wow.
I mean, I'm not
Crazy.
that keen to go to the pub, but yeah, certainly not on a Monday anyway.
Yeah.
Cool. So, what else is going on over the weekend? So, obviously, the big news in the UK is about the reopening of non-essential retail and leisure sites. They start trading today. Hairdressers as well. My wife's absolutely rammed today with bookings. Um,
Brilliant.
I'm going to try and get down the gym later if I can as well. So that's all good. One step closer to a bit of normality. Elsewhere, there's not been a whole lot that's really caught my attention this morning, to be honest, on the news. We've got the start of the latest round of earnings in the US, which will no doubt bring focus. Anything that you've seen on the news front at all,
No,
Steve?
just on the oil front. Aramco agrees a 12.4 billion deal to sell stake in pipelines. It's selling a 49% stake in its pipelines to a consortium led by US-based EIG Global Energy Partners,
They're
which
selling
was
off their
announced.
assets.
Yeah, a bit strange, isn't it? I
Mm.
always sort of like look at sort of big deals like that. You think Aramco, one of the biggest, most profitable businesses in the world, selling off some of its pipeline. Only 49%, obviously, so keep full
Keep
control
the
of it, I think.
control. Yeah, but it's maybe realise that oil's not the way forward. I don't know.
Yeah,
And using this latest rally as a chance to say, well, okay, we might as well just start backing out here.
yeah. Let's start to sort of get into renewables, shall we?
Yeah, maybe they
Leave
use the
someone else.
deserts in Saudi Arabia and build some big wind farms or something. Not
Yeah,
there's much out there, but yeah.
leave someone else
Cool.
talking about it. I loved it. I did see something the other week where someone was talking about wind farms, and they sort of like said, "Oh yeah, we obviously they have loads of the fans, obviously because of keeping the earth cool, and they actually thought the actual fan itself was just keeping the earth cool rather
Wow.
than replacing fossil fuel.
Okay,
So they
that's
they thought that
brilliant.
it's for global warming. All these
Yeah,
big wind farms. So maybe
that's
it
that's
is. Maybe
amazing.
we don't know enough.
Yeah. Okay, so let's get on to some charts then to start the week and see where we're at with a few of these markets. I'm going to kick off with FX, and then Steve, you can run us through
Yeah.
indices and commodities. So first up, just looking at what's going on with the baskets. So the blue line here that we have on the screen is the dollar index. That continues to be probably the strongest of the currencies at the moment, and this is over the sort of last couple of weeks or so. A little bit of a tick up this morning after a bit of a correction last week, and obviously we're seeing all the other currencies dip back as a result of that as well, but not much going on really at the moment. If we take a look at dollar index on a standalone basis, then we are in this sort of sequence of higher highs and higher lows. We seem to have found some support around here at 92.15, and we are ticking a little bit higher today. So if we see support form around here, which I expected to do around this 38.2% level, so around about 91.80 to 92.15, then that could form a bit of a base for a continuation higher. Ultimately, my target in the short term on dollar index remains up at this level, which is around about 94.50. So I think continuation of dollar strength is my favoured view at the moment. If we take a look at cable, this is quite interesting because it has broken out of this channel and failed to recapture it. We saw a fantastic retest here on the underside of that level, and that saw some selling off the back of that. We have found some support with this previous swing low from the 25th of March, which is just in front of this 38.2% level at 136.43, and again buyers have returned at that level today, so maybe we'll see a bit of a corrective move higher today in that. If we look at euro dollar, flip side of dollar index really, lower highs and lower lows. looking for some resistance to form around about this kind of level at 119.50. 2 days of weakness. I've drawn on a head and shoulders pattern as well. It's only a potential head and shoulders pattern because it hasn't broke any sort of neckline yet, but I think this may be forming. It's very speculative at this stage to say, but again, I think we could see a decent band of support in and around this 200 tick range, which is at 115.92 to 116.95. So quite broad, but I'll anticipate us to get down to that level in the short term, and that's what I'm looking for. On the Aussie side of things, this is where my real focus is from a personal perspective. I think that there will be more weakness in this. This is Aussie yen. Again, I've drawn on another head and shoulders top pattern, a potential one, waiting for that neckline around about 82.32 to get tested. We have seen the 5 days of weakness on that today, a further 0.25% lower today. Obviously, we've seen this break of channel as well and a retest of the underside. So I think we see weakness down to this sort of level around here. And then if that breaks, then we'll be looking for an even deeper downside target of 79.15 to 79.30. The other market I quite like is Aussie US dollar, and in this instance I can say that a head and shoulders top pattern has formed. We've got the left shoulder here, the head, and then the right shoulder, and we broke down below the neckline here on the 23rd of March, and since then we have been any advances or corrective move highs have been halted on the underside of this neckline. So what I think we're forming here is maybe a bit of a flag pattern, or a continuation pattern before a break to the downside, and I'll be targeting a move down to here at 72.35. That's pretty much it in terms of where I'm sort of seeing most interest, I suppose, from a personal perspective, and sort of just having to flick through these FX charts. Steve, what are you seeing on the indices and metals front?
Yeah, well, looking at the commodities first, obviously oil, I'll drill it down from the weekly chart. We're in this negative formation, but it's not really going anywhere at the moment. We've held above the $57 level in WTI crude oil, and it's just sort of like roaming about in the middle. If we look at this daily chart, let's try and get rid of this, make it a bit clearer. We're in this sort of corrective channel upwards, where we formed the low on the 23rd of March, and we've joined up with the low on the 5th of April, and we're approaching that sort of area. That comes in, the support comes in around about $58. So that'll be the first real test. On the 4-hour chart, I'm highlighting the reversal formation in the sort of form of a head and shoulders formation. However, it is downward sloping. It is a bit messy, so I'm not sort of completely convinced by it. But the measurement target on that is a move down to $50. I don't think this will play out. However, we'll just leave it on the chart to remind ourselves that there is potential there. I've redrawn the daily trend lines onto the hourly chart, and one of the trend lines I'm really looking at this morning is of interest is this 58.73 level in the WTI crude oil. We've seen the swing lows from the 7th of April, the 8th of April, and before that from the 6th of April, where prices rebounded higher. We had this break of this horizontal support, which goes back even to sort of like March period. So this is quite a key level today. I would say that's the pivot. If we break below it, we should see an acceleration and a move down to at least the low of this candle, which is 58.11, and obviously 57.66 before the 57.10, 57.25 level comes into view. So watching that this morning. On the gold, a little bit of a similar formation. We're in this negative price range. This is what basically dollar is strengthened, and this has had a bit of an impact on the commodity front, especially the ones priced in dollars. We've seen this reaction higher, the potential for a double bottom forming in gold. This weekly channel is still negative. We may have had the ABC correction. Are we ready for the next move up in gold? I'm not sure. That the fact that dollar has strengthened and gold is still holding on to these 1740 levels makes me think that maybe there's the gold isn't going to get the sell-off that we would normally expect when dollar advances. So on the daily chart, this shows the double bottom formation. Really need a clear break and a close above this 17. I suppose we call it because we had a close here at 1755.85, we'll call it a 1756 level. A clear break and a clear close above on the daily chart should lead to the extension higher. The mission move target is $1835 dollars. On the 4-hour chart, I've also highlighted that we could get rid of this little channel formation which you broke out of, and again highlighting the potential upside on this. You can see this is potentially an inverse head and shoulders extension. It's not really a reversal formation because it hasn't had a big sell-off before, because we had the sell-off down here. So yeah, on the daily chart, really the levels to watch for me are, I wanted to highlight the real swing lows, the 1730 level for a start, and for me the 1721 level. And then I don't really think there's a lot I mean, we've got this level all the way down at 1705. So between 1720 and 1705, there's not a lot, a little bit of a vacuum maybe. But below 1705, quite a fast move down towards the 1676, 77 level, which was the previous swing low and that double bottom potential. So that's it from the commodities. Going on to the indices. Let's have a look at what we've got on the indices. A very good week for FTSE last week. We managed to punch above the 68.10 level and closed really strongly, 69.24 on the weekly chart, which has basically also tested the 69.60. That was on early Friday morning, I think it was, and it failed, and it's reversed from there. So potential for a short-term reversal. I don't think it's over by a long shot on this FTSE, which is always helped by the dollar strength. If we get some dollar weakness, then maybe that will be a really nice reversal. Couple of negative candles we've seen on, but basically from Friday and Monday started off negative. So we'll see where that closes today. There isn't much between current prices and 68.14. Currently trading at 68.68. So 50 ticks lower is where we'll find some decent support. I think that'll be quite a nice level to sort of like, you know, dip the toe in if you're looking to sort of like move with this strength in FTSE. DAX continues to move higher, although on a weekly basis doesn't look as pretty. We've got a shooting star candle. Monday started off around about where we opened, around about where we closed last week. So really have to sort of watch what the price action is like. We can see how sideways we've been really since Wednesday last week, Wednesday, Thursday, Friday. Lots of indecision there after that bearish sell-off on the Tuesday. So a hanging man candle on the weekly chart. So maybe a sign of the rally slowing down. So be careful with that one on the DAX. Moving across to the Dow Jones, blue skies, new highs. New high formed last week, 33,806. We've flirted with that this morning, currently trading below. But yeah, what can you say about that? I mean, it looks just so like bubble-like, bubblicious, I think we could call it, the Dow Bubblicious Index. On the 4-hour chart, maybe we can bring some momentum indicators. The MACD is always a good one, showing how the momentum is on a decline, especially if we sort of don't extend it right. That's going down while the price is going higher. You know, classic sign of bearish divergence. So you have to be careful with this pushing up towards the new highs. Looks like there's further resistance up above around about the 34,000 level. NASDAQ, that sort of hasn't quite made it to all-time highs, but it's made it to the early April highs and rejected it. Starting off on a strong note this morning, though. Again, we see this hanging man candle very close to the previous 16th of Feb high. So 13,906. We're only 70 points away from there. Easily get there today. The retest, what does it hold? I'm not sure. Maybe worth fading initially, but keeping the stop really tight. S&Ps, that's trading around 41,000 sorry, 4,120. The high on that is 4,130, and yeah, a bit sort of like doesn't look too interesting, but I'm sure it'll pick up as we approach the US Open. Maybe we have to wait for there to sort of see anything happening.
Cool. Thanks, Steve. Okay, so gun to the head from Friday. Much the same. We can't seem to string together any sort of decent form at the moment. We had a sell in Aussie yen, which was half a hour offside at the 9 o'clock close, and Steve, you were stopped on your oil short at well before the close as well. So no real volatility in anything to sort of help us, so we're not getting much follow through on anything. But hopefully that will change this week. I mean, just looking at the sort of theme of my trades of late, of the last 7 trades I've done, 6 of them have been selling Aussie pairs. And I still think that's where it's at. And I'm hoping that, you know, by sticking around with them, I am going to get a big move at some point. In terms of the sort of overall on these trades, I'm 0.71 ahead by selling these Aussie pairs over the last 7 days or so. So hopefully I can latch onto a decent sized winner. So I'm going to go with Aussie yen again. I've got this range on the chart. We've got a 50% line here. We broke below it last week, but then, well, got back above it quite convincingly. But the overall trend in the very short term is negative. So I'm using this blue line really as a sort of line in the sand, and we're below it at the moment. So I'm going to try and sell it now at 83.31. Targeting a move down to these swing lows that we posted on 24th of March. Which is at 82.28. Fairly tight stop of 30 ticks at 83.61. So looking for 3.4R on that one today. I mean, ultimately, I've got targets that are much lower, but that's what I'd like to see today. What do you got, Steve?
I don't know. I think I'm going to go for a little DAX short. I just think that the daily candles, it's showing that it doesn't really feel like it wants to go higher at the moment. It just formed a new 4-day high at 15,275. So that'd be a nice place to put a stop. Really look for maybe this bearish flag to play out. Something like that. Put a stop above here. Wouldn't be a bad place. And getting short at 15,223. I'll have a stop at 15,283, so that's just above today's high. And let's go for a 4-to-1 risk reward right back down to the 15, just below the 15,000 level, 14,983.
Cool. In terms of news today, we've got Eurozone retail sales due out at 10 o'clock, expected to rise 1.2% month on month. Other than that, it's a pretty quiet start to the week, but there is a fair amount happening, as we mentioned, sort of commencement of the US earnings as well. So we'll be back tomorrow with some more, and in the meantime, trade safe and see you then.
Cheers.
Cheers, Em. Bye bye.